Hey everybody, my name is Matthew Sambanis. I'm a certified public accountant. My firm is based in Long Island, New York. And in today's video, we are going to discuss Chewy shares, Roaring Kitty, also known as Keith Gill, buying stock in Chewy shares, my personal experience with Chewy shares, or Chewy stock for that matter, and the long-term business plan of Chewy and whether it's a good investment overall. So just a disclosure, I bought the stock about a month and a half ago when it was trading around $16. Knowing what I now know, of course, I would have liked to have bought more. But of course, hindsight is 2020, and it's now trading about $25. So in the past month alone, it's had about a 60% increase. And there's been a few different factors that have contributed to this, which I will give you both of them. First and foremost, Chewy Inc. spiked again after pumping and dumping last Thursday when meme stock trader Keith Gill, known as Roaring Kitty, posted an image of a cartoon dog on X. And then there was a second pump, which occurred Monday morning in pre-market trading. After a SEC disclosure showing that Keith Gill's owned 9 million shares worth about $245 million, which is just absolutely mind-blowing. You know, this guy made a ton of money from trading these meme stocks. He essentially invented it, if you want to call it that, and going against Wall Street and shorts. You know, people would take out big short positions, and what happens is when the stock goes up, it causes a short squeeze. So not only does it go up, it goes up parabolically, and if you get to be on the opposite side of that, you get to make a ton of money. And when you do it with options, you don't make 10, 20, 30%. You make a couple 100% in a day, you know, especially if you know what you're doing, or within a matter of 10 minutes, you can make, you know, a 10, 20% gain. And on the flip side of that too, you could also lose all your money very easily, or a lot of it very easily. So anyway, his stake equates to about a 6.6% passive stake in the online pet food and product retailer. So that was one primary factor to the rise in Chewy stock. And the second was Ryan Cohen, who is GameStop's CEO, also co-founded Chewy. And, you know, basically GameStop is dead in the water. I was thinking about doing another video on that. If you'd like me to do a video on GameStop and analyze its stock, please let me know in the comments below, and I'd be happy to do so. You know, basically, long story short, is I would never buy a stock in GameStop unless I wanted to take a gamble on it. That's what that would be. But anyway, Chewy stock spiked in mid-June on rumors that Ryan Cohen was buying shares on behalf of GameStop. As I mentioned before, Cohen founded Chewy but left the company in 2018. And now, for GameStop, he plans to invest cash in other publicly traded companies, essentially making it a investment stock as opposed to a retail game stock, which, you know, again, basically, whatever, neither here nor there, and I don't want to diverge from the primary topic, which is touching on Roaring Kitty, buying stock in GameStop, in Chewy, and whether it's a good long-term or short-term investment for that matter. So another part as well, which was kind of big as well, Chewy stock also announced that they were going to use cash flow to repurchase shares of about $500 million. So Chewy itself is buying its own stock. And when a company is buying its own stock, it sees the company as being undervalued. And that's what, you know, I would say the argument is here. That's why I personally bought it. And we're going to go through those numbers very shortly. But basically, you know, there's a lot of factors that just absolutely pumped up this stock from $16 to $25. I think it went as high as 32, as a matter of fact. I was very happy when I saw that because I woke up and I saw my portfolio was just going up through the roof. So that always makes me happy. Of course, what goes up does go down, but luckily it hasn't gone below the $16 mark. And if you're going to ask me, do I think, you know, is Chewy going anywhere? The answer is absolutely not. And even, you know, if the U.S. goes into a recession, it's going to survive it, in my humble opinion. And by the way, this is not investment advice. I'm just some dude on the internet just talking freely. I just happen to enjoy doing this. So this is not investment advice. As a matter of fact, do the opposite of what I'm doing if you want. Anyway, one thing that I do want to point out is that for Chewy, its active customer count has been stagnant for a couple of years. So it's going to need to fix that in order to have the stock price continue to go up. And now, in their defense, in 2021, they have a fiscal year, January 31st, 2021, their sales were $7 billion. And now, fiscal year, January 31st, 2024, they're $11 billion. So their sales have gone up $4 billion, in 4 years, which is way more than, a 50% increase in 4 years. So, that's great. One thing I don't like is 3 out of the last 4 years, their operating income was negative, but, their cash flow has been positive. And now they're using that money to reinvest back into the company. And, just looking at a quick superficial look on the balance sheet as of January 31st, 2024, they have total assets of $3.1 billion, and they have total liabilities of $2.7 billion. Roughly $500 million in equity. So, they have enough money to stay afloat. Another, important thing to point out is the 52-week range has been $14.69 all the way up to as high as $39. The market cap is about $10 billion, and their gross margin, which is great, is about 28%. And, I also want to point out, and I actually highlighted this here. I'll show it to you. I don't know if you can see it. But basically, since their IPO, they've had a negative return of 31% versus the S&P 500's positive return of 92%. So, meaning if you put $100 into the S&P 500, you'd have about $192. And if you put your money into Chewy, $100, you'd now have about $70. And, over a 5-year period, the return has been negative 30%, so same thing. And the S&P 500 over 5 years has gone up 85%. So, listen, if you've been invested in Chewy stock, historically it's not very good, but at the height of the pandemic, when it was a stay-at-home stock and everybody and their mother was buying it, and, COVID was never going away and whatever, and you knew you were smart enough to sell it because you saw there was a bubble, God bless, you made a lot of money. So the next part, or this chapter, is going to be basically going to, would I like to have bought, more of this stock at $16? Yes. Is $25 fair for this stock? Yes. Will I wait for it to come back down to the $15, $20 mark? Yes, but I bought enough that if it doesn't and it continues to go up, I'm still going to be a happy guy. So anyway, is the company cheap right now? It's not absurdly cheap, but it's also, 80% below its all-time highs set in 2021. So you're still buying a stock that's actually down 80% since 2021. And if you can, you'll see what I see. I'm going to share it with you. And, if you're into economics, finance, making money, I'm on the cusp of hitting 1,000 subscribers. So I'm asking you nicely, please, please, please. I'm actually begging you. Please subscribe and leave a comment. Anyway, they have a gross margin of about 30% and a net profit margin of about 2.3% for the first quarter of 2024. The company continued its streak of improving profitability. So, the losses have gone down. In 2021, they were about 90 million. Now it's only 25 million, subjectively speaking, in terms of only, right? Those are huge numbers. What's been the, increase in their bottom line, though? The rise has been Chewy's streamlining across its logistical network, now capable of serving 80% of the continuous United States in 1 day and 100% of it in 2 days. The company can reap rewards of spending years building up its distribution network across the country. That's absolutely fantastic. And Chewy's average miles traveled per package declined by 28%. So that means they're going to be spending less money on shipping. And, their auto ship sales now equal 80% of the total revenue, which has grown from 66% in 2018. And that's going to continue to increase, by the way, in my opinion. It's gone up substantially. It'll probably continue to go up substantially from here. Basically they have an installed base of scheduled recurrent purchases, which is great. You want recurrent revenue. You want to be able to, I don't want to say count your chickens before they hatch, but Chewy can basically essentially count their chickens before they hatch. And, they know where roughly 4/5 of its sales need to go in weeks ahead of time. And what else does it have going for it? They're moving into the veterinary clinic industry, which, I can tell you, I have clients who are veterinarians. I've consulted for veterinary clinics, and they have very, very nice margins, fat margins, stupid money. And, once you pass your break even on that, everything goes to the bottom line. It's a beautiful industry. Or, as long as you know what you're doing and you're operating efficiently. Anyway, these store openings set the stage for higher margin growth story for Chewy stock as it looks to disrupt the vet industry that is in turmoil due to significant private equity purchases into space. So again, if private equity is in something, then you know that it's a high profit, high margin business. And, another thing that they plan on doing, fully launching into, is operating systems for veterinary clinics. And again, that's also fat margins, high margins, whatever you want to call it. And the company's also launching full speed ahead into sponsored advertising and pet insurance through partnerships with Lemonade and Trupanion. And they're also making private label products, which all have much higher margins. And where's the kicker? The price to sales of Chewy is only 1 compared to the S&P 500's average index of 2.5. So price to sales of 1 is huge. I mean, I think NVIDIA, off the top of my head, has a price to sales ratio of 20. Don't hold me to it, but it's something just egregious where it's an overly high price stock. That shows that Chewy does have value there. And what else? So Chewy also has its own telehealth platform, online pet pharmacy, and a range of insurance offerings, which we just discussed. It expanded it to Canada, its first international market. It also announced that it would be opening more veterinary clinics than it had opened in Florida, and they have them in Colorado and Georgia now. And they plan to launch more veterinary clinics as they move along. And this is good, right? I said they were operating at a loss. They're operating at a loss, but the company recorded net income of $67 million in a 3-month period, up 193% on a year-over-year basis. So just going off of the quarter, they're actually very profitable right now. So, listen, if you have nerve and you're okay with your putting in $100 or $1,000 or $100,000 and it going up 10, 20, 30, 40%, which I don't see the stock going down 40%, but obviously anything is possible, versus where it could double to, that's huge, and again, a price to sales ratio of 1 is like pennies on the dollar, especially for a .com, in my opinion. So anyway, as the adage goes, past performance is no guarantee of future results. If you live in one of the 87 million U.S. households that American Pet Products Associations owns at least one pet, you know what Chewy is, right? Everybody knows what Chewy is. Everybody knows what the boxes are. When I walk my dog, I see it all around. I see the boxes all around the neighborhood. I'm comfortable buying it. I know the cash flow is there. I know the income is there. And what's different, right? You have to have a point of differentiation or a competitive edge to make it really worthwhile. How is Chewy different from rivals like Petco, PetSense, and PetSmart? They're all well known. They're all familiar. Everybody knows them. You've seen them at the shopping malls, supermarkets, whatever. And yes, they're all established. They're brick and mortar. But Chewy was established to operate only as an online business. And the pet supply chains now recognize they built up too much brick and mortar. They have too much overhead, And people continue to move towards online shopping, and they continue to move away from brick and mortar shopping. And so they've struggled to adapt to the advent of e-commerce, which requires a different type of warehousing and logistical infrastructure. So, it does have a competitive edge. They had record-breaking first quarter revenue of $3 billion, up more than 3% year over year. And, the other thing to point out, a lot of my channel goes over how weak the consumer is, how they're beaten up, massive credit card debt, massive this, massive that. I'm not going to get into the full shebang now. You can just go scroll through any of my other videos and you'll see that. But the retailer is still growing when I believe, I'm sure we're in a recession. I think we're in a recession. We're probably in a recession. The numbers don't lie. The government does lie. But if you look at the actual numbers, and especially strip out the unmanipulated numbers, you'll see times are tough. And most people, love their pets more than, they're like family to them. So not only is their top line growth going, the bottom line is going, and that's because of the function of size and scale. And what else? Wow. I usually try to make my videos like 10 minutes long. I don't know how long I've been going on for, but we're towards the end. And if you've watched this far, please let me know. That means the world to me. It goes a far way, and it lets me know what I'm doing right. It also lets me know what I'm doing wrong. So anyway, as big as e-commerce has become, the Census Bureau reports that only 16% of the nation's retail spending is done online. This leaves up 84% for grabs. Market research outfit Package Facts, however, predicts 44% of the United States spending on pets will be done online by 2028, up from last year's 37%. So this implies double-digit growth within Chewy's corner of the pet supply market. I mean, that's great. And the analyst community predicts this year's expected top line of $12 billion to swell to $15 billion in 2028. So, you're buying a $10 billion company that in a few years will be having sales of $15 billion. And if it stays at a price to sale ratio of just 1, you have at least 50% upside in 4 years. And considering this year's almost done, it's more like, 3.5 years. So does it seem like a no-brainer to me? Yes. Am I going to sell my stock anytime soon? No. If it goes down, am I going to buy more? Yes. Do you plan on buying Chewy stock? If so, let me know. And what else? Profits are expected to continue growing at an even faster clip from this fiscal year's forecast of 25 cents per share to a consensus of $1.71 4 years down the road. I mean, that's, huge increase, right? And what's possible from that, size and scale are, the more you run your business, the more efficient you become, the more, you have to go with. And, to summarize it, sooner is better than later. Anyone interested in stepping into a new stake in Chewy should be forewarned. Excessive volatility almost certainly awaits. This isn't just a meme stock. It's also one of the market's most watched meme stocks, heavily targeted by short sellers, but also heavily touted by traders hoping to spark a short squeeze. There's plenty of push and pull here. And yeah, there is. And, I'm more of the thought of motleyfool.com or fool.com or Warren Buffett, where I believe in buying and holding. So if it goes up, I'm happy. If it goes down, am I happy? No, but I'm happy to buy more at a lower price, and after doing my own due diligence, which you should always do yours, I feel like this is a good stock to buy for the long term. Like I said, it's $25. And if you have any questions or comments or would like me to do a video on a particular stock, just let me know, and hope you have a great rest of the day. Thanks.